All right, Accounting to Kiddos, welcome to your new Applia course. It looks very much the same on the outside of things, but as you get into your work togethers and on your own, you're going to notice that there are a few changes. So let's look at those together here. So first off, um, you'll see that it should look similar here. The only thing that's going to be majorly different for you is that there's this button or a link, I should say, that says click here to view the instructions in a separate window. You do need to click those in order to be able to see, our instructions for the course. So we want to make sure that we have that open and ready. I'm trying to get it so that it'll fit in that screen, but it's not wanting to cooperate with me. So as you can see, it says that we are going to write the answers for the following. We've got sales, prepaid insurance, Pacific Supply, which is an accounts payable, advertising expense, supplies, Trent Associates, which is an accounts receivable, capital stock, and petty cash. And then for each of the accounts above, we're going to complete the following. We're going to prepare a T account for each account, entering the title of the account. In parentheses to the right of the account title, we're going to identify whether it's an asset, a liability, owner's equity, revenue, or an expense. We're then going to label the debit and credit sides and then label each side of the T account using normal balance, increase, or decrease. So hopefully, cross my fingers, this should be a nice little review for you because this is something that we did back in like chapter 2 or 3 of Accounting 1. So hopefully it's not too crazy and it should give us a decent intro into what this is all about. So I'm going to minimize this and go back to my work together here. So we have our first account, which is sales. Sales, remember, when we drop this down, we have to choose whether it's an asset, owner's equity, liability, expense, or revenue. We know that sales is a revenue account, so we're going to list that here. Then our next step was to put where the debit and credit sides were. So remember, debit and credit are never going to change. Debit is always on the left, credit is always on the right. But then we need to identify what the normal balance is for a sales account. And a normal balance for sales is a credit, so we're going to put normal balance in here. And I believe that you can, once you start typing, it'll kind of fill in for you. You can just hit your tab key and it will fill nicely for you. And then we have to say with a sales debit, is that an increase or decrease? And so sales increases on the credit side, so a debit would be the decrease side, and then credit would be the increase side. So that's all we're doing for each of these. So let's go over to supplies. Supplies, of course, is an asset. Okay, debit and credit. Because supplies is an asset, assets increase on the left side of the accounting equation. So our normal balance is a debit, which means that we increase on the debit side and decrease on the credit side. Head over to prepaid insurance. Prepaid insurance is also an asset, so it's going to look just like supplies. We've got a debit and a credit. Debit will be the normal balance, and it will increase on the debit side and decrease on the credit side. Now, in case you forgot what Trent Associates was, you might have to go back and look at that instructions here. So Trent Associates was an accounts receivable. So an accounts receivable, remember, is an asset. So we'll plug in asset here, and it'll look the same. Debit, credit, normal balance on the debit side, increase on the debit side, and decrease on the credit side. Scrolling down, let's check Pacific Supply. I believe that was in accounts payable. Yes, it is accounts payable for Pacific Supply. So accounts payable is people that owe us money. So that would be a liability. Debit and credit don't change. However, liabilities, normal balance is a credit, which means that we decrease on the debit side and increase on the credit side. So then let's talk about capital stock. Capital stock, remember, is a form of owner's equity. So our account is owner's equity. Again, debit and credit don't change, but let's think about capital stock. Capital stock is on the right side of the accounting equation, which means that it will have a normal balance of a credit, which means we decrease on the debit and increase on the credit side. And then our last two we have to worry about are advertising expense and petty cash. So advertising expense is clearly an expense there, so we put debits and credits here. The thing we have to remember about expenses technically reduce owner's equity because they're a cost of doing business. So technically, their normal balance is a debit because it's opposite of whatever the owner's equity is. So we increase on the debit side and decrease on the credit side. And our last one is petty cash. Petty cash, remember, petty cash is a small fund that we have, just cash that we can use for miscellaneous expenses and small expenses we don't want to write checks for. So petty cash is actually an asset. So we'll put asset in here. Again, debit and credit do not change. And since it's an asset, its normal balance is a debit, which means it increases on the debit side and decreases on the credit side. So hopefully that was a very simple little review for you to do and get used to kind of having to open up this other instructions that we'll be using quite a bit of here. So you can head over and do your on your own, and then there is a similar one for the uh, application. I'm just going to show that to you really quick because it looks a little bit different than what we just did. But it is still essentially the same thing. So I'm just going to take you to your application and show you that quick. You're going to notice again that we need to open this in a separate window. So I'm just going to shorten this up a little bit. It kind of gives you an example of what we want it to look like. So you'll be putting check marks in here, except if you read the directions, we want you to type a V to indicate the check mark. And so the first one has been done for you. So you just have this handy dandy little chart that you're going to fill in, but it's essentially the same thing that you just did, just in a different format. So you can go ahead and do those, and then don't forget about your terms and questions.